folks, welcome back to Investment Income for Life. Today's topic is on Netlink Trust and whether its 6.13% distribution yield is sustainable. I was looking through the latest FY 2024 results of Netlink Trust ending 31st March 2024. It was shocking to see that once again, Netlink Trust is paying out excessive distributions way over its free cash flow. Its accumulated losses has also burdened to $670 million as at 31st March 2024. So today we are going to do a deep dive into its cash flow statement and also a quick review of its cash flow analysis to look at what is the actual amount that is sustainable in terms of distribution. I find it interesting that the key selling point by management has always been about the attractive distribution yield of over 6% for Netlink Trust. It does indeed look very attractive when compared to a 10-year Singapore government bond, which is at 3.11% yield. And if you compare it to the SDI index yield itself, is at 4.22%. So it's way above this particular benchmark also. Appearance can be deceiving. So without further ado, let's take a closer look at its cash flow statement and the free cash flow analysis. From the consolidated statements of cash flow, look at FY 2024 column and look under cash generated from operating activities. So this will be the cash flow from operations. Next, we need to look at certain items in investing activities. That is the purchase of PPE. That is the property, plant and equipment, as well as purchase of intangible assets. And for good order, I have also taken in the repayment of lease liabilities for the computation of free cash flow later on. Okay, so now let's plug the numbers into our cash flow analysis. So look under section 1, free cash flow computation. Net cash flow for operations, we have around $288 million from the consolidated cash flow. Next, we also take in the capex, the purchase of property, plant and equipment. So we less of $132 million. And as I mentioned previously, I have also included in the repayment of lease. That is around $3 million. So we arrived at a total of $153 million in terms of free cash flow for the whole financial year of 2024. Next, we look at the distribution policy for Netlink Trust for the financial year ending the 31st March 2024. We can see that for previous, the first half of the year, it is giving out $0.0265 per unit. Number of shares or units has remained the same. Then for second half, it again paid out $0.02650 per unit. And number of units is similar to the previous years also. The total dividends, right, you can see that per half year is around $103 million. That means that for the whole financial year, they are giving out $207 million worth of distribution. Since this distribution is at $207 million, which is way higher than the free cash flow that we worked out earlier in section 1, the $153 million, we actually have a deficit of $54 million for the financial year ending 2024. Clearly, this is unsustainable, and Netlink Trust has been paying out excessive dividends for distribution for many years. Then the next question will be, what is the sustainable distribution yield for Netlink Trust? To answer this, we can just simply use the free cash flow of $153 million divided by the number of units, that is 3,897 million units, and you get a distribution yield of 4.54%. So to sum it up, it simply means that the 6.13% distribution yield exited. Out of this, only 4.5% is sustainable through its business operations, while the other 1.5% is paid out via capital. We can do a further sanity check by looking at the statement of changes in shareholders' equity. And for Netlink Trust case, this is the unit holders fund changes. So you look at the full financial year of FY 2024 and FY 2023, the accumulated deficit at the beginning of the period, you can see that is 514 million in 2024 and 421 million in FY 2023. And then it ends with the accumulated deficit at the end of the period with 670 million for 2024 and 540 million for 2023. And the main reason for the increase is due to the distribution paid. You can see that the distribution paid for 2024 is 205 million relative to the profit for the year of 103 million. So we have an accumulated deficit that keep increasing. So the accumulated deficits for Netlink Trust will increase by 100 million every year. So in another 4 years' time, these losses will balloon to 1 billion. I recall checking with the management team before on this strange usage of capital to pay out excessive distribution, and the reason given was that this is to optimize the current capital structure because the leverage ratio is still very low. As you can see, the loans taken out by Netlink Trust has been increasing every year. The debt equity ratio has also increased to 30.25% from 27.81%. And we also had the issue of the ballooning accumulated losses. My personal thoughts are that this cannot go on indefinitely. There will come a point where Netlink Trust management has to stop taking out loans to pay out distribution. The good news is that once that point is reached, the management can simply just pay out based on the sustainable yield of 4.5%. In addition, with the growth of the Netlink Trust business, the yield may hover around 5%, which is still quite decent. Okay, that's all for today, folks. Have a great week ahead, and may you all be well and happy always. Bye.